Welcome everybody. Today we're going to be talking about my top 4 dividend stocks. These stocks are solely for dividends and I'm banking on making a lot of dividend income with these stocks. Alright, if you want to see what I'm talking about, stay tuned. Let's get into it. Welcome. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate y'all checking my channel out. And I hope everyone had a happy holiday, whatever you celebrate. I really hope that you guys got everything that you wanted, or are just enjoying your time off. Hopefully, you got time off. Um, we're gonna be talking about dividends today. All right, like I said, 4 dividend stocks, and I love to receive dividends. That's one of my favorite gifts that the stock market gives me. Dividends, can't go wrong with it. Like I said, it's for income, and you can make your retirement a lot better if you have a set up dividend portfolio. All right. So we're about to go get into it. I'm about to give y'all the 4 stocks, but please like the page, subscribe to the page if you like the information. Um, like I said, I'm just trying to grow and I want us to grow together. All right. So let's get right into it. All right. So we're gonna be talking about 4 stocks. 2 of the stocks are ETFs. They dividend ETFs. All right. We're gonna be talking about Noble and SPHD. Those are the 2 ETF stocks that I'm banking on. I'm putting a lot of money into those stocks because I really got faith, and I'm gonna show you guys why I got faith in them when we go on the computer. The other 2 are REITs, which are real estate investment trusts, and the 2 that we will be covering is O Realty and EPRT, Essential Real Estate Property. All right. So we're gonna go over those 2 stocks and those 2 ETFs. All right, but I can show you more when we get to the computer. Let's go to the computer.
All right, guys. So the first ETF that we're going to check out is Noble. All right, Noble is PowerShares S&P 500 Dividend Aristocrat ETF. And one good thing about the Dividend Aristocrat ETF, Noble, they only buy into companies that are dividend aristocrats, which means that there are companies that have upped their dividends over the last 25 years. So that's the qualifications for you to be in the dividend aristocrats. And like I said, that's the only people they buy. And the aristocrats are really stable companies. And as you see, it's ranked A on ETF.com, top 25 percentile for its peers. And all right, we're gonna go down the chart to the chart. This year it had a dip just like everybody else because of due to COVID. This is right around the time COVID happened. It spiked, it went down, and that's when I kind of got in. I got in, but I kept adding to my position. But it has already recovered from that COVID hit. So it is up for the year at about 6.5%. All right, which is good, but it would have definitely kept growing if it wasn't for COVID. As you can see, if we go to the 5 years, it's projecting up. So this is a good way to get into stocks that are mainly dividends that don't have that much growth, but in the ETF will grow because people keep buying into the ETF and collecting funds from the dividend stocks. All right, so this is why I'm into this one. All right, we're gonna scroll down. Main thing, like I said, I can go over this all day, but I just mainly want to show you guys what sector is mainly into. It's mainly into in more heavier in industrials, which are of course building companies, and then is into consumer non-cyclicals, and then financials, then basic materials, and then consumer cyclicals. All right. And I do want to let y'all know, in case y'all don't know what that word cyclical means, I did have a little breakdown because I'm new, so I had to. It was one of the things I had to first research before I got into these companies. All right, so when something is cyclical, it's stocks and their companies that have direct relationship to the economy, while non-cyclical stocks repeatedly overperform the market when economic growth slows. The easiest way to remember this is cyclical means stuff that people buy for like entertainment, like you go on a cruise, you going to the movies, uh, things like that, things that are entertainment. Non-cyclical is even if the economy is bad, you still need to go to the store and buy milk. You still need to go buy food. So that's an easy way to remember what cyclical and non-cyclical mean. All right, there's entertainment and needs. Easiest way to remember. All right, but just a little lesson. I wanted to throw that in there because I did had to look it up myself when I was investing in these. All right, and then the top holdings. We're gonna go to the top holders, and I'm pretty sure you guys are gonna know some of these companies. They're gonna be really familiar to you. Uh, Albemarle Corporation. They are mainly a chemical company. They make chemicals, and then Abivi. They are pharmaceuticals. They make pharmaceutical chemicals. ExxonMobil, Chevron, Aflac, uh, Property Trust, a Reed, Raytheon, Raytheon Technology Corporation, Cisco, Target, Coca-Cola, Walgreens, Johnson and Johnson, Pepsi, 3M. A lot of solid companies. Abbott Laboratories, Walmart, O'Reilly. That's one of the reads that we're gonna go over. O'Reilly, Hormel Foods, Procter and Gamble, a lot of McDonald's, a lot of companies that you guys should know, probably heard of. And then if you look at these stocks by themselves, you're gonna see the stock are pretty stable. They might have up and downs, but they don't have that exponential growth. But this ETF has more growth than having one of those stocks because a lot of times they just kind of bumble, maybe 10% at most growth because they are dividend stocks. They're giving high dividends because they're stable companies and they just need more people to invest in them so they can grow, you know? So that's what I wanted to show y'all. And like I said, Noble, it's one of the safer ETFs because of the quality of stocks that it holds. So this definitely is one of the ones that I'm taking to my retirement. Like I said, you guys can do a little research, look into some of these companies, but it's definitely one of the ones I'm betting on. Like I said, ETF Noble. All right. So now let's go to. Oh, and I do want to say, me myself, I have 23 shares of Noble, and they give about $2.12 a year. I know they do pay quarterly, but I just averaged it out to the year. But they give about $2.12 a year. So if I hold my 23 shares, which I'm gonna increase, but if I hold my 23 shares, I would be making $48.76 a year just for holding my stocks that I got in Noble. All right. So Noble, check them out. SPHD. They rated a D, but I do want to point out SPHD pays you monthly. Pays you monthly. Me, I have 20 shares of SPHD, and they give you about 15 cents monthly. All right. So annually, that's $1.80. I got 20 shares of them, but they are pretty decent. All right, and SPHD, this is Invesco's S&P 500 high dividend, low volatility ETF. So this ETF should not be as volatile as a growth stock or any other stock. It's built on being stable. And I'm gonna show you guys how it does that. It too, we're going down to the charts. It too had a spike due to COVID, just like all the other stocks had a nosedive, and it hasn't recovered yet. So it's a good, basically, recovery stock because it hasn't recovered yet. Usually before COVID, it was at $43. and right now it's sitting at $37, almost $38, 37.25. It's in at 37.25, but again, just like every other company that is recovered from COVID, it's gonna go back at least to where it fell from. So at $43, so that's a good growth rate. That'll be a good growth rate to catch just because it has to go back to where it fell from. And then if we look over the 5-year plan, that's what I'm saying, it's low volatility. So as you see, it's kind of sat at this 40, around this 40 mark for a few years. So that's something to know if you get into this stock. That's why I went over that growth and dividend differences in my last video, because you see this stock, because I'm in it for dividends, I really don't care if it stayed at this 40, but I'm getting it below that 40, but it stayed at this 40 for almost like 4 years, around this 40 mark, which is cool because it was still paying dividends monthly. All right, so just know that you get in it, don't think it's gonna grow exponentially, but as long as it stays in and you get your 15 cent per share, that's pretty good. Pretty good. All right. And again, it hasn't recovered yet. So for the year, it's a negative 11.4%. But again, it still has to recover from COVID. So that's a good opportunity to at least get back up there before it get back to around this $40 mark. All right. And we're going to look at some of the holdings. The top sectors in it is mainly into utilities. That's how it stays pretty decent and stays level, because the main thing they're into is utilities, which is like power, water, companies like that. And then it's financials, then it's basic materials, then technology, then consumer non-cyclicals. All right. So that's how it's laid out. And then we go to the top holders in them. They got Dow, Iron Mountain, Altria, ExxonMobil. A lot of these companies you might not know offhand. AT&T, Seagate Technologies. They make a lot of PC equipment. I got a lot of Seagate stuff. Hewitt Packard. They make printers and stuff. So they are into more companies that are HP. They are more computer based. That's why it's technology, but they're kind of solid companies. Companies like Hewitt Packard and Seagate, they all make components to computers. So you can see what they're into. They even got Pfizer, Walgreens, Dominion Energy, First Energy Corporation. A lot of companies that you probably need to do your research on. But one of the other things I did like about this ETF is I don't have really any of these holdings in my portfolio. So I kind of use this to dive into maybe a little of that utility section. So that's kind of how I'm enhancing my portfolio. But again, this ETF is pretty decent because it gives you a monthly dividend. So you really can track how much money you're going to be making off your dividends. And it's one of my favorites too, SPHD. All right, now let's take a look at O-Realty. All right, O-Realty is a stellar company. They are a dividend aristocrat, so they've been knocking it out of the park for years. As I said, Noble only invests into companies that are aristocrats, and it's a good reason that they do so. O-Realty, like I said, is a REIT, and if you know anything about REITs have to pay the most money in dividends to its customers because that's how REITs are set up. Like I said, I'm gonna do a video on REITs too. Look out for that. But O-Realty, it was before the pandemic happened. It was at $84.92. It's not there right now. It's currently trading at $61.09, which is pretty good. Like I said, they fell because of COVID and they haven't recovered yet. So it's definitely a recovery stock that you guys should look out for. And what O-Realty invest in, what type of properties they invest in, bam, let's go to their site. They invest into companies like, they invest into real estate properties that are basically big names like Walmart. They own the property that Walmart sits on, many Walmarts, Coca-Cola buildings, 7-Eleven buildings. Like I said, Home Depot buildings, well, properties, they own a lot of those type of properties. They aren't your typical landlords that are just buying single family homes. They go out here and buy the land that Walgreens sits on, or the local 7-Eleven sits on, your Dollar General sits on, and those companies pay realty rent. So they aren't the typical landlords. They got the car dealerships. What your car dealership sitting on, they paying realty. All right, so that's why they are such a great company. All right, and then let's go back to Charles Schwab and how much O pays in dividends a year annually per share. O pays $2.81. That's great. That's stellar. Right now, I have 23 shares of O Realty, and like I said, annually I get paid per share $2.81. All right. That's pretty good. Pretty good. And like I said, the type of properties that they buy, you know them. You know no one is gonna buy them out, or they're not gonna just, sell the properties. If you own every property that a 7-Eleven is on or a car dealership is on, you're doing pretty good. And they do deal with acquisitions too. When somebody has to foreclose on something like that, they'll go and buy it up. So O'Reilly is pretty good, pretty good. But I do want to show you guys the 5-year too. If you look, again, it's their dividend read, so they don't have that exponential growth. They, let's see, for the last 3 years, they have stayed pretty much around this 70 mark of COVID happened. Stayed around this 70 mark, but they have been going up. Finally went past 80 and then dropped because of COVID. But so if you invest into this company, know that you're not investing for that exponential growth. All right. So that's O Realty. Another one, the last company that I wanted to show you guys, EPRT. O pays the most. O pays the most dividends out of all the stocks I'm going over today. O pays the most. All right. All right. Now we're looking at essential properties realty trust. All right. EPRT. I already showed you guys this in my game winning portfolio video, but again, I want to go over that. They do the same thing. They do the same thing. They are like a competitor of O. So they own stuff like Arby's, Walmart's. They trying to get the same companies that O got, and they want to own those properties. They basically buying the same thing. Medical services, so doctor offices, where you see doctor offices at hospitals, essential real estate trusts. They are trying to own those properties, so the hospitals pay them for the lease. All right, which is a pretty good game, pretty good game. Of course, somebody wants to build a hospital. Okay, I'll lease you my land. So those two companies do exactly the same thing. But what's special about EPRT is it's more so a startup company compared to O. And what I mean by that is I'm gonna show you guys them two compared. Like I said, they invest in the same thing. EPRT is younger, but we're gonna go to compare them real quick. All right, this is the two companies compared, and as you see, they kind of go neck and neck. EPRT was higher, and then it dropped. This is because of COVID. Every company did this, and then it kind of both haven't fully recovered yet. But when you go out to I guess we're gonna stay at 2 years, the 2-year mark, because EPRT just IPO'd, I think it's 2019. And when you go and look, yep, January 2019, but they just IPO'd January 2019. So the price of EPRT is the cheapest. All right, I forgot to tell you guys that. But as you see, in terms of growth, EPRT is beating O out the water, and it's mainly because it's a newer stock. It's a newer stock. All right. So yeah, I just wanted to show y'all that. Those are my 4 dividend stocks on the computer. All right, guys, that was my 4 favorite dividend stocks. Again, I got faith in these 4 companies. You guys should check them out and do a little bit of research on them and see if they will be a good fit for your portfolio too. Again, dividends is all about making sure that you're getting that income for the future. And like I said, dividends will be a great way to make sure you have a little extra during your retirement or whatever you want to spend your money on, whatever you have ambitions to have. Like I said, dividends can help you get there. And again, so we looked at Noble, which all of these stocks are under $100 right now. Noble, which is at 78, 98, under $100. SPHD, which is 37.26 right now. O, which is $60.80, and EPRT, which is the cheapest, which is $21.33. All right, all of these stocks have potential, and again, like I said, I'm banking on all of them. Like I say, make sure you do your research and check them out too. If you got any dividend stocks that you are invested in, please make sure you drop them in the comments. Maybe you can help somebody out, or maybe I can check into it too and see how it stacks up. All right. Thanks for tuning in, and please like the video and subscribe if you found any of this information helpful. All right. Appreciate y'all and appreciate the love that you guys have been giving me. All right. Please come back and see me on the next video. I will be talking about real estate investments versus REITs, basically rentals versus REITs. All right. So come back and check me out. All right. Out.